Today we're tackling the big question for real estate investors. Should you go with owner financing or stick with traditional bank financing? Whether you're just starting out or scaling your portfolio, understanding these two types of financing could save you time, money, and a whole lot of stress. So did you know that there's a way to buy investment real estate without even stepping foot in a bank? So first, let's define owner financing. Sometimes it's called seller financing. It's when the seller of the property acts as the lender, not a bank. So you're gonna make payments directly to the person that sold you the property instead of a bank. Bank financing, on the other hand, is the classic route. Most of the time, this is what people are gonna use. So you're gonna be going to a bank and getting a mortgage from a financial institution. Both these options can work for real estate investing, but they're pretty different. But let's look at the pros and cons. So let's start with owner financing. This could be a game changer for somebody starting out, maybe new to investing, maybe you don't qualify for a loan. So the pros of owner financing, probably the number one, easier to qualify. So a seller sets the rules and you basically got to sell yourself to the person selling the property. They don't care about your credit score usually. They don't care about your income as much as a bank would. You know, if you got a few dings on your credit, they're gonna work with you. Second thing with owner financing, we found this very true. I've closed on properties in less than 2 weeks of making an offer. Way faster closing, less red tape. You could close in days instead of weeks or months. And they can work really well if you're racing against the clock to try and get a deal closed. Third thing about owner financing, it's a lot more flexible. You can negotiate with the seller, you can negotiate rates, you can negotiate terms, a lot more negotiable. You can negotiate your down payment. Just ask the seller, you know, what's gonna suit the seller's needs? Maybe they don't need a bunch of money down. Maybe they are looking for cash flow themselves. Like, figure out what the seller needs and sell them on yourself for what they need. So another thing seller financing has to offer is a lot lower costs usually. You can skip some of the bank fees like originations and appraisals. If you need a lower down payment, just ask the seller. So another thing is the potential for lower costs. In turn, that all puts cash back in your pocket. So let's move on to possibly some cons. Usually, I'm just saying usually, it's not always, seller financing is going to have higher interest rates. I've done quite a bit of seller financing. I've purchased things on a lot of owner contracts. Some are higher rates, some are on par, but sometimes the seller isn't real savvy on what's going on in the market. You know, they're not banks. They don't know what's going on. We purchased a commercial property on residential terms because the seller thought that they were getting a great deal. And that's great. We gave them what they wanted. That was a great deal for both of us because we got residential rates on a commercial piece of property. Well, most of the time, seller rates are going to be higher. Usually seller financing is going to have a balloon payment, probably 5 to 7 years or something like that. Seller financing could be a good bridge until maybe you work up some credit, are in a position to get bank financing. The seller financing may extend your loan. Another con to seller financing would be they can foreclose on your property a lot quicker than a bank would. A bank's gonna take some time if you miss some payments, whereas owner financing, they can come right in, foreclose on you a lot quicker than a bank would. But there again, it's all negotiable. You're talking with a person, not a bank and an institution. Usually everything's negotiable, but you gotta watch your legal protections. Dealing with a bank, you know, you've got a little more legal protections than you would on an owner contract. So I would probably have an attorney go over that owner contract before you signed it, just to make sure you know everything that's going on that contract. So owner financing offers flexibility and speed, but it does have its risks. So let's see what bank financing has to offer and how it stacks up. So bank financing is probably the most common. You either go to your local bank, a bigger bank. I tend to prefer local banks myself. You can usually find better rates, or even at like credit unions. Find better rates there. I've always preferred going to local banks, not the huge national banks. What are the pros of bank financing? So usually there's lower interest rates, but as I said before, you can negotiate a low rate on an owner finance. Rates and terms are better. You'll get a 30-year fixed on a bank loan and probably no balloon payment. So that could boost your cash flow. Banks are gonna offer you a little more customer protections on your loan because they're regulated by federal laws. You got a few safeguards against shady practices, but I would also have an attorney look at those. Even if you're dealing with a bank, a reputable bank, I would have an attorney look at your paperwork. Another benefit of using bank loans is taxes. So mortgage interest, tax deductible, usually. Check with your CPA, but in a lot of my situations, mortgage insurance is tax deductible. So that's a really good perk. That could lower your tax bill. So what are the cons of bank financing? So the number one con in my book, strict qualification criteria. You got to have good credit. You got to have stable income. Commercial real estate, they're going to go more off of the property's income. Some loans you don't even need to show your income because it's all based off the commercial property. If you're self-employed or you're rebuilding your credit, it may be tough. That's when you got to sell the seller on why they should hold the financing for you. Another con for bank loans is they could take a while. You could get pre-approved for a certain amount, but still, in my opinion, it's taken way longer to close a deal using bank financing than it ever has on a owner finance deal. So another con to bank financing is, we kind of talked about it, owner financing, but banks are going to have fees. You're going to have a lot higher closing costs because you'll have origination fees, you'll have appraisals, you'll have title insurance, which title insurance, that's good to get seller financing. Get a title search on the property. Another thing is bank financing is way less flexible. Like I said, with owner financing, it's all negotiable. You're talking with somebody, you're going to work out the deal. You're going to make it work for them. You're going to make it work for you. You're going to meet both of your needs. Whereas in a bank, they give you your options. You either take it or leave it, and you either qualify or you don't. And it's a lot slower. So which one's right for you? Well, I'd say it depends on you, your specific situation, the deal, and the needs of both the seller and the buyer. But I've done both. I tend to prefer owner financing, but I do like the rates of bank financing. So if you can qualify for the bank loan, maybe go for it. But if you need quick, flexible closing, probably owner financing. If you're okay with negotiating directly with the seller, maybe go for owner financing. If you've got strong credit and income, you want lower rates, longer terms, you value legal protections and tax credits or tax perks, maybe bank financing's the route for you. I guess let's paint a picture. Say you're a newbie investor with a 600 credit score. The bank says no, and the seller offers you 10% down with a 5-year term. You negotiate the rates. You could get in the game and build your equity and refinance it when that 5-year balloon comes up. But if you're a pro, got great credit, bank might lock you in at like 4% for 30 years. So what do you think? Owner financing or bank financing? Drop your take down in the comments and tell me if you've tried either or. If this helped you out, hit the like button, subscribe for more real estate goodness, and ring the bell so you don't miss out. Thanks for watching. See you next time.